Hello friends, this is Dr. Sunil Kadam, welcoming you to my channel, Let's Learn Accountancy with Dr. Sunil Kadam. On this channel, I will be uploading videos on various topics of accountancy. I hope you will enjoy these videos. So we understood the ledger posting of that journal entries, which is passed for recording the investment transactions. But this is the ledger where fixed interest bearing securities can be recorded here. The investment having fixed interest bearing security. There are some investment which may have variable returns bearing security, variable returns. The example for this investments is debentures, bonds, having fixed rate of return. The another type of investment is called as a variable return bearing security. Example is the shares. On a shares, returns will not be interest. It would be dividend. Dividend will receive as a return. The earlier case, the returns were in the form of interest. So let us understand, if you invest into the ledger, what could be the returns? How it would be recorded? Returns are dividend, but how it will be incorporated in the books of accounts, how the entries passed. Entries are similar. Ledger is similar. Slight change is what? The returns in the form of dividend instead of interest. And in a case of interest, we used to calculate interest each and every time. Whenever transaction take place, we used to record interest, accrued interest. See the opening balance, see the purchases, when there is a sale, and actual interest received. So whenever there is a transaction, we have passed entry. Even in a closing balance, we have worked out an accrued interest. But when it is variable return bearing security, the dividend will not be calculated each and every time, because dividend received, only it will be received when company declares it. But the interest is bound, time bound. That's why it is fixed, that we knew up to this period, for this particular period, we are going to receive the interest, but there is no guarantee of dividend. Therefore, dividend will be recorded only it is received. This is what a received entry. So let us try to understand how the investment account is prepared when there is a variable return bearing securities. Format is similar. Date, particulars, nominal value, dividend and cost, similar for credit side. Any ledger, when you open it, opening balance has to be, if it is there, has to be recorded. If there any opening balance, it will be recorded either on a 1st Jan, if it is your commencement of the year is 1st Jan, or generally it is 1st April. On a 1st April, you will record to balance brought down. The nominal value means the face value of shares will be recorded. No dividend cost. The cost of investment we have learned, that will be charged here. Then if there any purchase of investment during the year, entries pass, investment account debit to cash or bank. So investment account debit to cash or bank, two purchases, the two bank purchases, and the nominal value and the cost. If any dividend is received, entries pass, bank account debit to interest or dividend. So in dividend account credit side by bank, dividend received is recorded. So that journal entry is recorded. Then there is a possibility at the end of the year, whatever interest received during the year will transfer to profit and loss account by passing the entry. dividend account debit to profit and loss account. The entry was passed, dividend account debit to profit and loss account. Therefore, dividend account debit side to profit and loss account, transfer to profit and loss account is recorded. Then there is a possibility of a sale of investment. If these shares have been sold off, then entry will pass. When it is sold out at a cost price or carrying amount, it will be passed just like as a bank account debit to investment account. So investment account credit side by bank. Investment account debit credit side by bank, same. The nominal value and the cost. If it is sold with a profit, the excess amount is received, which will be debited here. Profit and loss account. To profit and loss account, the amount of profit. If it is loss, it's similar to the earlier case. No, if it is loss, it will be credited here. By profit and loss account, loss. Only in a cost column. The loss amount. The profit amount will be charged here. But remember, friends, both will not occur on the same time. Either profit or loss. And at the end, we have to close the account and carry forward the balances. This is what a normal course. But let me tell you, there are two words on your screen below the ledger. One is called as a bonus share, and the second one is a right share. These are the two terms which are associated with the investments having variable returns, or in other words, shares. The first term is bonus shares. I hope you know what is meant by bonus shares. Bonus shares are the case where company earns more profit. They want to distribute to their shareholders in the form of bonus by issuing bonus shares. And for that purpose, they issues the shares without having any consideration. It's a free of cost. Whatever in shares you have invested on that shares, you will get some proportionate shares free of cost from the company as a part of the share in the profit. That's called as a bonus shares. So whenever bonus is received, it receives free of cost. No single penny has to pay by the shareholders. The company will adjust it from its profit. That's why bonus share. If it is so the case, it has to be recorded. The entry will pass, entry in the books of account, because you're not going to pay anything. But entry has to be passed. No? Otherwise, if you ignore it, your returns on the investment will be incorrectly calculated or tracked out. That's why we need to pass an entry. Entry will pass investment account debit to bonus shares. So bonus shares automatically recorded. See here, 2 bonus shares. We will be recording only nominal value. So nominal value बढ़ जाएगा. The nominal value will increase and the cost, nothing will charge because no single penny is paid for it. That's what the difference. When we purchased it from the market or when it was IPO, the entry was passed. The investment account debit to bank in a nominal column as well as in the cost column. But when there is bonus is received, only nominal value, the number of shares will increase, nothing will be added in the cost because no single penny, no single rupee is paid for it. That's one. So bonus shares, it will be recorded here. There's one more term called as a right share. I hope you know what is a right share. It's another form of issue of shares by the company. But in this case, company will charge you. But only priority is given to the existing shareholders. That is what a normal course of issuing right shares. It gives a right to the existing shareholders to acquire new, to purchase new. Not necessarily. Yes, only existing shareholders will get a right to purchase the new issue, which company is going to go for a new shares, issue of shares. But The existing shares has a right to receive it. If it is so, then the shareholder has to pay. Then entry is to be passed. It's just like as a normal purchases, but it is right share. But in a right share, some additional incidents takes place. The right share is a share. It is not mandatory for a shareholders to purchase it. He can deny. He can say, I don't want it. It's just like as a whenever in a urban area, whenever you are going to sell your flat, you have to sell it to the neighbor first. You have to inquire. See, guys, I'm going to sell this flat. If you are interested, please let me know. Otherwise, I'll sell it to the outsiders. Then later on, you should not say to us that why you didn't talk to us. We would have purchased. It is a general understanding that the right of the neighbors is first. The same thing applies for farm. So whenever any farm is for a sale, the owner has to ask the neighbors first, I'm going to sell it. Are you interested in a buying? If they are saying no, then you can go for the outsider. The same case comes here for its right share. The existing shareholders right is there, but he can deny. There is no compulsion of buy of purchasing it. There are two terms, additional two terms comes in a right share. One that called as the right shares or enjoyed or purchased it. That's one case. When right shares are issued, then the company can say send a notice to the shareholders that we are going to issue a right shares. If you are interested, please apply for it. That he can accept it. That's one case, or he can deny it. Then that not acceptable. There's another term called as it is reassigning. Whatever your right, you can give it to somebody else. Re-announcing. It is called as a re-announcing of rights. In other words, selling the rights. You can sell that right to your say relatives, to your friends, or you can sell it in open market and you can earn money from it. That's possibility. So whenever right shares comes into picture, if it is taken up, then it is just like as a normal purchases. It's see, normal purchases also nominal account as well as cost. Same here, nominal values and the cost. If it is re-announced, means given to somebody else, it will not be recorded here. There's a possibility 50% he has purchased and 50% he has sold out. Then only 50% entry will pass and 50% sold out to the others will not be recorded here. It will be directly transferred to the profit and loss account as a profit on re-announcement of right shares, not recorded in the investment account. I hope I made it clear. When there is a right issue, there's a possibility the right issue may be accepted by the shareholder. Then he has to pay the money and get the shares. The nominal value and the cost of purchases will be recorded in this manner. If he partly purchased, the same entry will pass with that amount. But if he re-announce the right shares, means he sell out the right to the market, then there is no entry will be recorded. Otherwise, the remaining part remain as it is, what we have for normal other investments. So we will be closing the account. By closing, it will be carry forwarding the nominal accounts total. We'll write to the credit side balancing figure. Cost, again, the total, will write it here, the balancing figure. Then there won't be any accrued dividend. Dividend will not be calculated on a 31st March. But we will do the total, right to the debit side, and the balancing figure will transfer to profit and loss account. This is what a normal way we have to present the ledgers of investments. And as far as your exam is concerned, you will be given on either debentures or bonds, or the second category, shares. So we will be presenting ledger account for shares or debentures. So let's move on. Some important terms. If you want to record your investments accounting, if you want to do the accounting for your investments, you should be aware about some important term. Term number one. Term number one is what? Accrued interest. I have used that word several times. So let us understand what is accrued interest. Suppose if you purchase any investment from the market, we are talking about fixed interest bearing security, debentures and bonds. If you purchase it, it will return you certain amount with a certain date. So the date of your purchases and the date of interest. Now let us, to understand that, let's come to the example, and then I'll come back to how it is calculated. The example is that on a 1st January 2021, 10% investment purchased for rupees 1 lakh. That is a, say, debenture or bond of rupees 1 lakh. When it is on a 1st Jan 21, 10% investment purchase for 1 lakh. Interest dates are 30th September and 31st March. These are the interest dates for these investment. So interest received on a 30th September 2020 on 1 lakh rupees, 10%, it comes 6 months, because it's for only for 6 months, because it is received in 2 years, in a year 2 times. In a year 2 times, it is September and 31st March. So on a September, 6 months interest should receive 5,000, right? 6% of 10% for a 6 months. On a 31st March, it will receive 6%, not 6 months, 10%, 5,000. So this is what a normal course which is going to happen. But if the investment is purchased on a 1st Jan 2021, so 21, it will receive 5,000, right? So let us understand the year for this particular company which is going to buy. It starts from 1st April, ends on a 31st March. It's a commencement of the year, and end of the financial year. This investment, it is from 1st April 2020 to 31st March 2021, is one academic financial year. All right. So in that particular year, the purchases took place on a 1st Jan 2021. On a 1st Jan 2021, purchase date is what? A purchase date, right? On that date, you purchase the investment. But on that investment, the last interest date was 30th September, interest date. On a 1st September, the interest was received. From that date to the date of purchases, from the date of last interest to the date of purchases, whatever interest is due is called as an interest accrued. Because this is what a interest which you will receive, but you wasn't a owner at that time. You purchased for 1st Jan. But the interest you are receiving, the interest will receive on a 31st March for an entire 6 months. And that 6 months interest include the interest which is not belongs to you, because you have a right to receive the interest from the 1st Jan. So whatever these 3 months interest is called as accrued interest. And this is what a 3 months interest, which is actual interest received. And that entry will passes here. For this 3 months accrued interest, the interest is calculated in this way. On a 4th Jan, accrued interest will be calculated 1 lakh 10% for 3 months, 2,500. That is accrued interest. It will be charged to the investment account. Let me show you how it will be charged. It's here. When you purchase, you will charge it here 1 lakh and 1 lakh for a cost, and the accrued interest would be 2,500. That's 3 journal entry. Your nominal value, cost of investment, and the accrued interest. Accrued interest. Now let me show your accrued interest for these 3 months from the date of last interest till to the date of acquisition. Whatever interest is due is called as a accrued interest. That's what is. When a security is purchased, interest accrued from the last date of interest up to the date of purchases is called as accrued interest. How it is calculated? The nominal value of your investment into the percentage of interest into months for the last date till to the purchases divided by 12. Same year. What is it? Nominal value. Nominal value 1 lakh into the rate of interest into the month, 6 months. That is interest received. But accrued interest is 3 months. From the last date of interest till to the date of purchases, 3 months. That's what your accrued interest. I hope I made it very much clear. Now, next important term is Cum-Interest cost. Cum-Interest cost, a cost of investment which include the accrued interest. Just now we understood what is accrued interest. Now let us understand what is a Cum-Interest cost, and there is another term called as a ExInterest. Both will be discussed. To understand what is a Cum-Interest cost, Cum-Interest cost is a cost of investment which include the accrued interest. Just now we understood the accrued interest is a portion which is not belonging to you. It is an interest prior to the date of acquisition. If it is received by you, then it has to be taken into account. And there are 2 ways of taking into account. One, Cum-Interest and ExInterest. So let us understand what is first Cum-Interest. Cum-Interest cost of investment include the accrued interest. The cost of investment include the accrued interest. It means that it covers the investment. The cost of covers the investment, covers the cost of accrued interest. So to understand, let us take example. The same example which we had on a 1st Jan 21, 10% investment purchase for 1 lakh, having nominal value 1 lakh. Interest dates are same, 30th September and 31st March. Accrued interest is same because from the date of acquisition to date of interest to the date of acquisition, it comes 2,500. It's a similar. But Cum-Interest costs include the total price minus accrued interest. So total price is 1 lakh minus accrued interest is 2,500. So the cost of your investment would be 97,500. And to record that, we will pass an entry, the entry which we knew, investment account debit to bank. But here the interest is supposed to be paid. Therefore, entry will pass investment account debit 97,500. Interest account debit 2,500 to bank 1 lakh. Because you have paid interest plus the cost of purchases. So the cost of purchases will be 97,500. In a simple word, whenever there is a Cum-Interest is given, what you have to do minus the interest from the total cost. And the balance would be your cost of Cum-Interest. So Cum-Interest price is how much here? 97,500. Kaise pata chala? How we learned it? It's a 1 lakh minus interest is what a 97,500. and will pass entry. But the same case for a sale. If the same cum-interest price has to be considered while you are selling also. In that case, if it is sold out, the entry will pass. Bank account debit, 1 lakh. Investment price is 97,500. To interest, you have received interest 2,500. If there any profit, it will be credited. If there any loss, it will be debited. So what we understood, cum-interest is the price of investment at the time of calculating it, which it is understood that the interest is included in it. But while disclosing in the books of accounts, we have to subtract it. So the investment actually purchased for 1 lakh with cum-interest, which it seems that include interest. So that has to be deducted. So the cost of your investment would be 97,500. I hope you understood it. Similarly, there is another concept called as a ExInterest. It includes, it excludes it. If you want to purchase that investment, you have to pay 1 lakh plus that additional interest, which of 3 months, 2,500 you have to pay. So when it comes, the buying investment on an ExInterest price, you have to pay additional 2,500 for acquiring that 1 lakh rupees. It includes, it not includes, it has to pay additional interest. So let's understand the same example. You purchase 1 lakh interest investment for 1st Jan, and the last day interest date was 30th September. So 30th September to 1st Jan, 3 months. Accrued interest, which we have already calculated, it is 2,500. 1 lakh at 10% for 3 months, 2,500. So the price of that investment would be 1 lakh plus the 2,500. So 1 lakh 2,500 would be the cost of investment. So let's see that when you record it, it will be pass entry. Entry is investment account debit 1 lakh, interest account debit 2,500, to bank 1 lakh 2,500. 1 lakh 2,500. Here, the interest is paid additionally, not included in the cost. When it was cum-interest, it was included. When it was ExInterest, it is additionally to be paid. Same applies for a sale. When you are selling it, entry will pass. Bank account debit 1 lakh 2,500. Investment 1 lakh and 2,500 additionally received as a part of the interest, additional. That's why when it is when you are going to record either purchases or sale on the ExInterest price, that interest has to be ignored. Just whatever the price it is told, it has to be the price. No need to deduct the cost from the interest from the cost. But cum-interest minus the interest from the cost. So ExInterest price covers only the cost of investment, and the buyer is liable to pay additional amount as an interest accrued up to the date of purchases from the date of last date of interest. So this is what important terms one should be know. One, accrued interest, another cum-interest, and ExInterest. So to end the theoretically part, let's take a recap or points what we understood by going through this chapter. The first one says the point number 1, on each sale, the profit or loss is calculated as sales price less weighted average cost. क्यों ऐसे कहा गया? क्योंकि AS 13 में गाइडलाइंस दिए गए कि जब भी आप कोई भी इन्वेस्टमेंट बेचते हो या परचेस करते हो तो उसके ऊपर बेचने की बात कर रहे हैं, जब बेचते हो तो आपको उसका कॉस्ट निकालने के लिए वेटेड एवरेज कॉस्ट का इस्तेमाल करो। और हमें पता है वेटेड एवरेज कॉस्ट कैसे निकालते हैं, वो फॉर्मूला यहाँ पे है। वेटेड एवरेज कॉस्ट इक्वल्स टू नंबर ऑफ सिक्योरिटी सोल्ड, जितने सिक्योरिटीज इन्वेस्टमेंट बेचा है, इनटू टोटल कॉस्ट ऑफ इन्वेस्टमेंट ऑन दैट ऑन द डेट ऑफ सेल। जब जिस दिन हम बेच रहे हैं उस दिन हमारे पास कितने इन्वेस्टमेंट थे, उसका टोटल कॉस्ट, नंबर ऑफ सिक्योरिटी सोल्ड इनटू कॉस्ट ऑफ इन्वेस्टमेंट डिवाइडेड बाय टोटल नंबर ऑफ सिक्योरिटीज हेल्ड। तो आपको जो अमाउंट मिलेगा वो होगा आपका वेटेड एवरेज कॉस्ट। ये फॉर्मूला इस्तेमाल करके हम वेटेड एवरेज कॉस्ट निकालेंगे और जो सेल्स है उसमें से वो माइनस करेंगे, तो जो बैलेंस मिलेगा वो आइदर प्रॉफिट या लॉस होगा और वो रिकॉर्ड करना, ये ऑलरेडी हम डिस्कस कर चुके हैं। प्रॉफिट और लॉस ऑन अ सेल ऑफ इन्वेस्टमेंट has to transfer to the profit and loss account, whether current or long term investment. Both cases में जो भी प्रॉफिट है और लॉस है ऑन द सेल ऑफ इन्वेस्टमेंट, वो कहां पे ट्रांसफर होगा, इट विल ट्रांसफर टू प्रॉफिट एंड लॉस अकाउंट, और उसके लिए अलग से जर्नल एंट्री पास की जाती है और वो हमने देखी। इंटरेस्ट अमाउंट रिसीव्ड कैसे कैलकुलेट करते हैं, इंटरेस्ट कैलकुलेशन का, इंटरेस्ट अमाउंट रिसीव्ड इक्वल्स टू नॉमिनल वैल्यू और फेस वैल्यू ऑफ इन्वेस्टमेंट इनटू द इंटरेस्ट परसेंटेज इनटू months due divided by 12. It can be 3 months, it can be 6 months, it can be 9 months. It depends upon the क्वेश्चन में जो सिचुएशन दिया उस हिसाब से मंथ्स होगा। तो 9 मंथ, 6 मंथ, 3 मंथ, 5 मंथ, 1 मंथ तक भी होता है, 1/12 भी होगा। तो आप इंटरेस्ट कैलकुलेट करो, वो हमने तो 7th स्टैंडर्ड में सीखा, हाउ टू कैलकुलेट इंटरेस्ट। Any taxes given, TDS, if you are A division student knows it, what is mean by TDS. If TDS is available, given, then TDS has to be deducted and whatever net balance comes, that has to be credited to the interest account, and the portion paid as a TDS will be debited to the TDS account. That has to be remembered. एट द एंड, तो अगर टीडीएस कुछ दिया तो वो टीडीएस इंटरेस्ट में से माइनस करके दिखाओ, जितना माइनस किए हो उतना टीडीएस को डेबिट दिखाओगे और बचा हुआ इंटरेस्ट को क्रेडिट किया जाएगा। एट द एंड ऑफ कॉस्ट ऑफ इन्वेस्टमेंट, जब हम एंड में कॉस्ट ऑफ इन्वेस्टमेंट लिखना चाहते हैं, उसको कहते हैं कि कैरिंग अमाउंट। वो कैरिंग अमाउंट लिखते समय हमें कॉस्ट, वेटेड एवरेज कॉस्ट पे ही लिखना है एज पर AS 13 के हिसाब से। AS 13 के हिसाब से इट हैज टू बी शोन ऑन द कॉस्ट। बट लेट मी टेल यू फ्रेंड्स, अगर लॉन्ग टर्म इन्वेस्टमेंट है तो it will, the carrying amount would be the cost, and cost is calculated on a weighted average price, right, basis. Magar if it is a current investment, the investment which is going to sell within 12 months, in that case you have to compare your average weighted average cost with the market price, because fair value is the value on which the investment can be sold out on that date. So on that date, whatever market price is your fair value. So your weighted average cost or the fair value means market value, whichever is lower. If your market value is lower than the cost, then you have to adjust the difference. That loss on revaluation has to be adjusted and should be recorded in the books of accounts by passing the entry profit and loss account debit to loss on revaluation of investment, and that will be credited to the interest account. So entry will pass profit and loss account debit to investment account. So investment account credit side में लिखा जाएगा loss on revaluation. That's very important if it is current investment. If it is non-current investment, forget about these adjusting the revaluation loss. It's only on a carrying amount, and carrying amount is what? cost. Cost is weighted average cost as per the guidelines given by AS 13. So the last 2 points are Cum-Interest cost of investment include the price of investment minus accrued interest, and ExInterest cost equals to the price of investments only, because interest is paid separately, additionally वो ज्यादा interest दिया जाता है. So this is what a point one should remember. And thank you guys for watching this video. If you have any queries, doubt, difficulty, or feedback, feel free to write in a comment section. Make sure to hit the like button if you understood the concept explained in this video. If you would like to see more such kind of videos, don't forget to subscribe this channel. Make sure to hit the bell icon as well in order to get notification whenever I upload a new video. Share this video with your friends in order to make them benefit out of this as well. Thank you once again.